Hey, welcome to the closing beat, everybody. Happy Thursday to you. How you doing out there? All is good for you? You having a good day? Good Valentine's Day? Today's Valentine's Day, right? You celebrate today, or better yet, this time you could have celebrated a couple days ago. You don't celebrate on Valentine's Day, or probably even this weekend. It's expensive, man. Valentine's Day. You celebrate afterwards and then you get cheaper candy, right? Anyways, we're financial advisors here at Jazz Wealth. We're financial advisors for people who don't think they can have a financial advisor. Everything you need to know about us is on our homepage, including our fees. Yes, I said the dirty word, fees. What does it cost? Well, other advisors don't even put it there. You have no idea. What am I I'll pay you something, right? What am I paying you? Right on our homepage. You don't even have to guess there. Tonight, we've got Wine and Wealth. Looking forward to that one. We are going to cover all kinds of good stuff, some fun stats. We're going to make the inflation number really easy for you. We're going to do a cool little breakdown for that one there. Some tax help and a little bit of behind the scenes with some of the data that I get. And how the heck do I keep up with all this stuff? I'm going to show you tonight on Wine and Wealth, so be sure to join us there. If you are a client or research member of Jazz, I look forward to it. I really do. Tonight at 8 o'clock Eastern time. All right, so retail sales number. There were some headline numbers or headline stuff and then some not so headline stuff that should have probably been headline stuff, so we're going to go over both of them. Retail sales come out and actually kind of missed the mark, right? That's the way you look at it. But remember, the opportunity for anything is below the headline. Oh my God, Trump did this or that. Below the headline. Retail sales this or that. Okay, below that. What's the data? I need to know where to go. Fun fact, that's how I bought my own airplane. It's not a jet or anything, but I saw how Trump did it. We got his tax returns. I was like, nah, okay, I want to do the same thing. Instead of getting mad or frustrated, excited, greedy, whatever about the headline, go a step further. So let's do that here with a retail sales number. Here is a breakdown of retail sales. I did the month over month and I did the year over year so you could see what's going on. The opportunity here is to look inside the categories. Total retail sales fell by 0.8, which is what you'll see on the headlines, is actually 0.83. Still positive year over year, but that was kind of a shocker. If you look down here, was it really a shocker? We have building materials, which was the headline thing. Oh my God, building materials down 4%. Well, month over month down 4%. It's already trending lower. It just means it hit a new low. All right, fine. We're all staying in our house because interest rates are high and we're not spending as much on building materials. All right, I gotcha. Auto and gas usually get stripped out to come up with something usually called like a core retail number or X auto and gas. And that's because these two numbers can be rather volatile. They can be quite positive one month and then quite negative the next. Overall trending lower. Not a surprise. They just trended a little bit lower. If you look above here, we've got furniture. All right. Not going so well. Now it's going a little better. All that means is we found a bottom. That doesn't mean people are buying furniture. It just means we've trended so low there, furniture, that even a little bit of retail sales in the furniture category looks like a bigger number. That's all it is, how the percentage games are played. Bars and restaurants, well, because we have Ozempic, right? We can still go out and, eat out. We can go do our thing there. So bars and restaurants, year over year up 6% and month over month 0.68%. What's really fun about that, if you look, here is a comparison of this is all we did, literally all we did. Bars and restaurants, food and beverage. There's no magic to this. So bars and restaurants, going out to eat, right? Food and beverage stores, buying food to take home to eat, right? A fun little thing that Wall Street likes to do is, oh boy, are we going out to eat more or are we eating in more? Well, again, you got Wegovy, you got Ozempic. I can go out and eat. I can eat whatever I want. You take the shot. You're good. I'm joking, of course. Nonetheless, coming out of COVID here is where we saw officially now comfortably, we eat out more than we eat in, right? So no wonder they're doing so well there. It's a whole different animal there. Aside from that, we have, we'll go to the markets here. Well, actually, what was it? Japan and the UK now in a recession. Not so much of a headline here today, but officially hits a recession there. I see all over the media today. This one got me a little fired up. Well, the U.S., how resilient is the U.S. to not be in a recession? Japan and the U.K., they're in a recession. It's because they followed this formula. right? We chose not to do it. Otherwise, in the first quarter of 2022, we would have already had our recession, right? We just chose to go, no, not this time. We're not going to use that definition. So very misleading in the media there, which is nothing new. That's what they've been doing, and so be it there. Anyways, we already had our recession, right? We all know that. We agree. If we look at the S&P, that's on your screen there, officially erasing the what we'll call now a blip. Remember yesterday we said, don't really have a lot of information there. We're going to need a little bit of help from that. We did not get any help from the so-called Magnificent Seven. If you're looking around there, some of the names that they're just overbought. They're not bad. I'm not going to pick on them. But you got your NVIDIA and Microsoft and Alphabet and all the others. They just didn't help out today. Little profit taking from there and went everywhere else in the market. In fact, tech, let me say this right, tech was the only sector that was down on the day. Every other sector was strong. So it's all that was a rotation or a little profit taking or just no interest in those stocks. We just mentioned that the other day. We just mentioned that the other day. Got a lot of slides for tonight. But we've been talking about this. Number of stocks moving below their 50-day moving average or pulling back. Right? We like stocks when they pull back, right? Number of stocks doing that versus the market going higher. Well, if these stocks wake up and they start going, then you go, okay, we have a recipe for a stock market that can go higher. That's all that happened today. Large cap growth was the weakest factor. When we, large cap growth, large cap index, large cap value, mid cap, blah, 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 small cap, blah, blah, blah. We break it down like that. Large cap growth was the weakest, and it's all because those big names, they just did not participate today. All the fun, the excitement was everywhere else, including Bitcoin. I know it pulled back a little, but well, that's an unexpected error. That's interesting. We'll navigate away from there. But Bitcoin pulled back. It knows I don't like to look at Bitcoin. So that's fine there. As you're looking down through the rest of the indices there, the Russell gets to me, it gets the most credit for the work that it did today, erasing that blip at least for the moment. I worry about now having a little bit of chop. Right? Some days that seem magnificent, some days that seem really scary. It's what we've had in here. I worry about that there. We'll see. Gold is kind of the same thing, but on a longer term basis. I haven't talked much about gold because it's trendless. And that's really what this moving average is here for, right? You got a green, at the moment, I have green and red. Green is the 20 and red is the 200. When they're flat, you kind of want to, do something else. Maybe something you want to pay attention to is crude oil. Nice little rally in crude oil here today, almost up 2%. And energy would be, you could use the XLE to look at that. Breaking out there. Energy stocks largely had a good day today. We'll talk about some of the other ones in just a minute. But that was the best performing sector on the day. And thanks to your bonds giving you a little bit of a rally, meaning interest rates go down a little bit. Not too bad there. I want to stop on that for just a moment because I'm starting to think that even in May, we won't have a rate cut, right? And I don't make predictions or anything. You can even see the futures market predicting that for May, that we won't even have a Lyft cut. I was digging through Lyft's earnings, right? Just sometimes I gloss over them and I'll make a little mark, come back later. Sometimes I'll have nothing to do and I just dig in deeper there. They said that 35% of their results, this is the most interesting thing I've heard from an earnings report here in the short history. 35% of their results were from higher ticket rides to events. Does that make you want to look into that a little bit? Have you ever left an event, a concert, a football game, whatever, you pull up your Uber or you pull up your Lyft, demand is higher right now, therefore it's going to cost you a little bit more. They get a higher margin for that ride. They're finding 35% of their total results were from that higher margin ride from people leaving events. They specifically mentioned the fact that people are still going and spending money at these events, which we then go pick them up. Is a football game cheaper or more expensive than it used to be? Is a concert, Taylor Swift, more expensive or less expensive than you probably should have spent on a stinking concert? Beyonce with the same thing, the US Open, looking around at some of this stuff. When you look at those events that you go to, you paid more money to get inside and sit and drink the beers and all the snacks and stuff that costs all kinds of money. Then you left and you paid a high ticket to take a Lyft ride home or an Uber ride home. Okay, that's good news for them. But if we still are willing to take a dollar and spend it very quickly on entertainment, non-necessity type objects, I get it. This is just one sort of example. But if we're still willing to do that, why on earth does the Fed need us to be able to borrow money cheaper? For companies to borrow money cheaper? Earnings are on pace to be 7% year over year. They're doing just fine. May is right around the corner. So I'll kind of follow up with my discussion yesterday about the market and the Fed cutting rates and everything. Well, what if they don't cut rates? There's no need for them to do it. Everybody is clearly showing we're willing. Look, I showed you bars and restaurants earlier. We're talking about this here. Let's talk about TripAdvisor. Beats on earnings by 80%. Yeah, that's why that happened today. They beat expectations by 80% because not only are people booking more, but they're booking higher ticket trips. Higher margin. Higher ticket is to the consumer. Higher margin is to the company, right? So remember we talked about being the investor and being the consumer. So the consumer is spending more on higher ticket stuff. The company is enjoying a higher margin. If it were so difficult out there, and we couldn't find jobs, and all of a sudden things, oh my gosh, I hate how much I spend at the grocery store and a bag of chips and blah, blah, blah. I see all this stuff. If it were that bad, would you still be spending your money going to a football game or baseball or whatever it is now? Hockey? Yeah, okay, hockey. So you get what I'm saying? So that's just a way to look at earnings and then break it into the economy and going, wow, 35% of their earnings results, which were just a better loss than expected, right? Came from that, and we're willing to do 1/3 of all riders on Lyft. We're willing to spend more. Kind of, it's a weird conversation to have, right? I don't know. I think that's different there. Okay, let's move on. I got on a little rant. Here we go. I mentioned a second ago earnings running at earnings growth in the S&P running at about 7% year over year. It's fine. It doesn't justify over 20 times earnings, really, for the S&P, but so far, you guys want to pay it, so that's fine. We had over 360 names reporting. That's about 80% of the S&P. Simple math there. 58% have beat, 10% have missed. All right, everybody else was in line or has yet to report. Earnings growth on pace for 7%, 3% for the quarter there. All that's fine. You can get that information anywhere. I'd like to take it a little deeper. We like to do analysis on the number of companies mentioning things that correlate. If words are said often between a string of companies in their reports, chances are it's something we need to look at. Well, right now, AI is the big focus. So let's take a look over here. The percentage of companies reporting AI in their conference calls is actually just hitting a new high. Last quarter, we didn't talk about it because it blipped a little bit lower, 31%. We're back up to 36% of all companies reporting have discussed AI in their earnings in one fashion or another. Notice how I do this. Every day with you guys, I start with a big thing, and then I break into it and say, well, what's going on under the surface? We did the stock market, and we look under the surface at the sectors. We then went into retail sales numbers. They missed. Oh, no. And then we go under the surface. We look at, hey, how many companies are reporting AI? And wouldn't you know it, we're going to break under the surface there. By sector, here's a breakdown. The last quarter is dark blue. The current, or what would have been the previous quarter, is light blue, right? So we're just comparing it quarter over quarter here. So if you look, tech naturally has the biggest influx of, or biggest number of times they talked about AI, the biggest number of companies talking about AI. But what I find fascinating is all the way over here, energy. Quarter over quarter, huge jump in the number of energy companies talking about AI. All you do, I'm just looking at that. I just look, whoop, that one's bigger than it was before. I'd like to know more about that. Now what you can do is go inside of energy and go, what in the world is going on there? Why? Why the sudden change? Is it monitoring and headcount? It's certainly not the actual workers. So really, really cool. I'm just touching on that one. We'll cover a lot more of that later in our Wine and Wealth. Apple. This will be stocks in the news. I'll take your questions, comments, complaints, frustrations, you know, whatever. Apple. I just wanted to point out, if you look at what Warren Buffett did, it's that time of the quarter where we look to see what Warren Buffett did. He took some profit on his Apple. Now he's already out. That wasn't today, right? He sold about 10 million shares, or Berkshire Hathaway sold about 10 million shares. Do you know what Warren Buffett's cost basis is on his Apple position? He has, shoot, I didn't put it down. He's got a lot of shares. He sells 10 million of them. His cost basis is about $34 a share. So that means he's got $135 billion in profits that he has unrealized, right? Unrealized gains. Yeah, well done, sir. That's a nice one there. Can you blame the man for taking a little bit of profit, or his people? Cisco beats on earnings there, lowered guidance, and most importantly, they talked about lowering their, they talked about layoffs, which we didn't talk about layoffs. So they're going to get rid of 5% of their workforce. Pop over here real quick. Conference calls that mentioned layoffs. I didn't share that with you. I totally forgot. I did all this work. So conference calls where they talk about layoffs, that's starting to go up too. I'm just adding this to my conversation 2 weeks ago where we said the number of news articles that have included layoffs in them is increasing as well. Now we have a little bit of backup on what we're, doing there. You see what I'm doing? We see something, we go, is that odd? Is that something? Let's put it off to the side. Then if you see something that correlates to it, we go, ooh, maybe something there. See how we just kind of add to it little by little? Sometimes you look at something, turns out to be nothing, right? I don't know what I was thinking with that. All right. Full year earnings for Cisco, by the way, cut by 5%. So you got 5% out of them today. Albemarle did not flush out. Actually, Albemarle didn't do too bad. The one weakness was that some of their one-time charges came in higher than expected. That was the only thing I could glean from it that was not very good. They talked about maybe a little bit lower sales, not too bad there. It did sell off after hours, and I thought, oh my God, there it goes, right? It was like 107-ish, somewhere down there. I thought we had it, but not a bad day for them. So no flush there if you were for the person that was looking for that the other day. The best scenario, like if you get it to flush out, worth watching, didn't happen. Hey, Occidental Petroleum there, they reported earnings, big helper here in the energy sector today. Their dividend is up by 22%. What did we just say the other day? Warren Buffett bought more shares of Occidental Petroleum. What great timing he has to buy it right before the dividend goes up a whole lot. Do you think that's great timing? Come on. Come on. You're messing with me. We've got earnings coming up tomorrow. Not a whole lot. Nothing of note. Maybe Vulcan, if you like looking at that stuff. Some of the different names there. Vulcan Materials and a couple other materials companies, but no wild moves expected there. I'll take your questions now if I can happen to figure out how to do this. The answers to your questions. See what we can do there. And then I'll get ready for wine and wealth. Kirk shops at the Dollar Tree, man. Saving himself some money. If we could all go back to the future, prices would go down, but blame the poor people. Talking about his $34 a share cost basis. I thought that was pretty cool. Because he's a long-term investor. You wouldn't expect it to be some high number. It's like, okay, he's just held them forever. I love it. Yep. Why would they go down? People have already shown they're willing to pay higher prices. And it's not just that. When we talk about, have you ever heard about the velocity of money? It's actually tracked by the Fed. We're not just talking about the willingness to pay more for something. We're talking about how fast you are willing to pay more. So they track that. When prices go up, does the pace of the dollar going to that product slow? Do people think about it? Do they shop around a little bit? Or do they just throw money at it and go? Well, the pace, the velocity of a dollar leaving your hand is still very high with these high prices. It's not normal. So a lot of people look at that and say, well, okay, you have a bunch of people soon to be out of money. How soon, you don't know. But the velocity of money is phenomenal right now to watch that happen. We're all guilty, so I'm not picking on you for that one. I see stuff and I'm like, I gotta have it, But I'm always like that. It's been amazing when we talk to different people who don't realize inflation is cumulative and prices won't go down. Yes, I get that one a lot, where people go, we talk about the inflation number, and I'm like, no, inflation grew at 0.3%, or in this case, 0.4%. If the number is 0, it means inflation stayed the same. So it's a fun, and I've even seen YouTube videos where people were talking, inflation went down. I'm like, no, it didn't. It went up at a slower pace. But I'm not one of those that will leave comments to pick on you, let you figure it out. Yep. You're doing an industrial analysis on Albemarle. Good for your pay. Oh, cool. That's a good one to know. Yeah. Now you can maybe incorporate a little bit of market pricing. Dave's got a good point. Yep. Clearly the Disney parks, right? You can't, I mean, good luck getting a room, getting to go. They're quite busy. Yeah. Pioneer. So remember, that's the merger stocks. Oops, that's not the wrong thing there. So you're likely going to get some squishiness in the price. See, we use big words around here. Trading much below the buyout price, ExxonMobil is going to pay later in the year. Why not just buy? You're assuming the deal will go through. I'm also assuming the deal will go through. But if it does not go through, then that's the risk premium that's adjusted in the price. That's all it is. Laz just sitting on a pullback, sitting on too much cash. Yep. I have one client. I have one client that's like, I got cash. I need to get it to work. Why? I want to be in this market. I'm like, I'm trying to hold them off, but sadly, it seems like we're going to end up buying whatever looks to be at least the best at the time. Otherwise, everybody else is looking at the same thing. Why are the wealth flights starting again? East Texas is oh, don't get me. I'm not. Just stop over there. East, I know you're waiting. I know. It's Eric's fault. I'm gonna blame it on Eric because I have nothing else to say. Are IUL accounts a scam? Mostly, yes. And that's, and I shouldn't say a scam like you're gonna lose your money. I should say they are not worth it for 95% of the people. But they have broken it down into a product that looks like it's really interesting for everyone. Nope, they were never designed for everyone. And in fact, Chris, our newest advisor here, is a specialist in all things insurance and is going to tear those apart in a way that everyone can understand. So coming soon. SMCI, more crazy. Oh, did it hit 1,000? It just got over 1,000. So I have a client that, I don't know if it's not you, it's not your name, but that is just killed it on this. It's fun to, I mean, look at this. That's a definition of parabolic, but I would have said that 10 days ago too. So what do I know? Very fascinating to watch there. Very fascinating. Doc says, tell him to wait 2 weeks. You see that? You know who you are? You know who you are. What was your stock pick of the year? I didn't pick one, right? It was an off year. Oh, Cody said I hit 3 in a row, and then the one was bad, and so maybe it hurt my feelings a little bit. Actually, I didn't even think about it, but yeah. Can't wait for that. I love it. Opinion on the regional banks. Seems like the NCIB worry is overblown. Yes, and remember, that's so niche. Like, that was just CRE, So it's, I know given what happened in the recent history, it's easy to get excited about that, but it doesn't mean they're out of the woods, personally, but it doesn't mean it's taken down regional banks. No. Also, the weighting of NYCB in the KRE is negligible. Yep. Oh, it's a friend. You see that question there? It's always a friend, right? So what is the pricing of this? I must not even pay for that data to get the pricing on that. You want to talk him out of it? No, well, first of all, in your Roth account, there's nothing wrong with what they're doing as long as it's considered like a lottery ticket play. I have a few where I don't know about this one, but if it hits 20 years from now, it's going to be amazing. Yeah, that's fine. But it's like 1% of the whole account. People disconnect that sometimes. They go, this is going to be a great winner. I should go 50% of my account. No, if it's going to be a great winner, 1% of your account having a massive gain will do all the work it needs to do. So it really shows their belief in whether they want to get rich quick or they think, oh my God, this could be a big winner, right? Did Warren Buffett need to have 50% of his assets in Apple at $34 in order to make $135 billion? No. Now, I bet he wishes, we all wish we would have, but think about it that way. There's certainly lottery tickets, whether you're getting into, as much as I'm against it, crypto or something. If it's a lottery ticket and has that big win, you don't need a big amount of money to go into it. Yeah. Wine and Wealth will be at 8 o'clock here tonight, right on schedule. I'm going to go get ready for that, actually. We're going to do the shotgun approach today. We're going to cover all sorts of stuff, as well as a few updates and good things from there. You guys enjoy the rest of... Are we playing the thing again? You took it away? Oh, because of the... Yeah. All right. Back to normal on our end screen here. Enjoy. We will see you later for Wine and Wealth if you're a client. Otherwise, what are we waiting for?